morning, ladies and gentlemen, and welcome to the 113th MPC press briefing. We thank you for honoring our invitation and to thank you for using your media platforms to inform the Ghanaian people about the bank's monetary policy decisions. This morning's press briefing follows the meetings of the MPC last week, and this morning the chairman of the committee will speak to us. We'll give you the press an opportunity to ask questions on behalf of the Ghanaian people. We're live on Facebook at the Bank of Ghana, on the Bank of Ghana website, bog.gov.gh, and on YouTube, Bank of Ghana. It's time to listen to the chairman. I respectfully invite the chairman of MPC and governor of Bank of Ghana, Dr. Ernest Addison, to deliver a statement. Shall we welcome with a round of applause?
Thank you very much, Sammy. You're becoming a serious pro at these things now. Yeah. Good morning, ladies and gentlemen of the media, and welcome to the press briefing for the 113th Monetary Policy Committee meetings, which took place last week. The committee deliberated on global macroeconomic developments, recent domestic macroeconomic developments, including the implementation of the IMF-supported extended credit facility program for the first 6 months of 2023, and assessed risks to the inflation outlook. A summary of the assessments and the key considerations that informed the committee's decision on the stance of monetary policy is provided below. Global GDP growth surprised on the upside in early 2023, supported by a variety of factors, including a fall in food and energy prices, the rebound in consumer demand in China, resilience in labor markets in advanced economies, and a robust services sector in many economies. Despite these early conditions, near-term global growth prospects remain uncertain, driven in large parts by a still weak manufacturing sector, heightened uncertainty, and tighter financing conditions. Against this backdrop, the IMF projects a downward revision to global growth at 2.8% for 2023 and 3% for 2024, and this will be heavily driven by Asia, particularly China. Global headline inflation continues to ease in many countries, although remaining elevated at historically high levels. The ease has been driven by the effects of tighter monetary policy, lower energy and food prices, and impact of reduced supply bottlenecks. Core inflation has, however, proven somewhat more persistent amid cost pressures and resilient labor markets. Despite production cuts by some OPEC Plus members, oil prices remain subdued amidst the uncertain global conditions. Meanwhile, most survey-based indicators of long-term inflation expectations remain anchored at around 2% for advanced economies. Global financing conditions remain tight in both advanced and emerging market economies, reflecting the pass-through effects of tighter monetary policy on bank funding costs and credit conditions. Bank funding costs have risen sharply following the quick transmission of past policy rate hikes to interbank and deposit rates. In the event, lending rates for households and firms have increased sharply while credit conditions have tightened. The elevated lending rates and tighter credit conditions have weighed on demand for credit in some economies. Although the banking sector turbulence in the U.S. appears to have waned, underlying credit, liquidity, and interest rate risks linger. In the midst of the uncertainty, banks are gearing up to building capital and liquidity buffers, and this will likely crowd out lending to households and firms. On the inflation inched up for the second consecutive month on the back of strong food price pressures. However, relative exchange rate stability, stable ex-pump petroleum prices, and effective liquidity management by the Bank of Ghana are exerting a moderating influence on non-food prices. The two readings since the May MPC meeting saw headline inflation rising to 42.5% in June 2023 from 42.2% in May 2023. The uptick was driven mainly by food inflation, which went up to 54.2% in June 2023 from 51.8% in May, while non-food inflation declined to 33.4% from 34.6% over the same period. In a similar direction, underlying inflationary pressures also picked up slightly for the second consecutive month since April 2023. All the bank's core inflation measures rose in the last 2 months. Core inflation, excluding energy and utility prices, increased to 43.5% in June 2023 from 42.8% in May 2023. Business and consumer inflation expectations similarly inched up, while inflation expectations from the financial sector remained flat. In the real sector, provisional GDP growth for the first quarter of 2023 was strong, surpassing expectations. The latest data from the Ghana Statistical Service showed that the real GDP grew by 4.2% in the first quarter of 2023, compared with 3% recorded in the corresponding quarter of 2022. Non-oil GDP growth was 5.5% compared with 3.7% in the same period of 2022. The observed growth outturn was largely driven by the services and agricultural sectors, which grew by 10.1% and 4.8% respectively. However, the industry sector contracted and recorded a decline of 3.2%. In the year to May 2023, the bank's high-frequency real sector indicators all showed signs of recovery in economic activity, albeit at a slower pace. The updated real composite index of economic activity contracted by 3.7% in May 2023 compared to a contraction of 5.4% in April 2023 and a growth rate of 1.7% in the corresponding period of last year. The main indicators that weighed down on the index during the period were port activity, cement sales, credit to the private sector and imports, domestic VAT collections, industrial consumption of electricity and exports, however, improved in the review period. Results from the bank's latest confidence surveys conducted in June 2023 reflected mixed sentiments. While consumer confidence softened on account of an uptick in prices of goods and services, which also led to some concerns about future economic conditions, business sentiments, on the other hand, remained largely unchanged. Businesses' optimism about the impact of stable macroeconomic conditions on their operations was offset somewhat by concerns about cost implications of recent tax and utility tariff increases. Similarly, Ghana's Purchasing Managers Index dipped to 50.4 in June 2023 from 51.3 in the previous month. The index, however, remained above the 50 mark for the fifth successive month, signaling stable business conditions. Monetary aggregates for June 2023 showed an increased pace of growth in broad money supply on a year-on-year basis. Annual growth in M2 Plus accelerated to 44% in June 2023, relative to 19.1% in June 2022. In terms of components, the growth of M2 Plus was reflected in both domestic and foreign currency deposits. Total credit to the economy, private and public sector, on a year-on-year basis recorded a growth of 15.4% to a stock level of 73.1 billion Ghana cedis. For the same period a year ago, total credit was growing at 33%. Private sector credit growth moderated significantly during the review period. Growth in private sector credit slowed to 16.1% in June 2023, compared with 33.7% growth in June 2022. In real terms, credit to the private sector contracted by 18.5% relative to a growth of 3% over the same comparative period. On the money market, interest rate movements showed mixed trends at the short end of the yield curve. The 91-day and 182-day Treasury bill rates decreased to 21.77% and 24.58% respectively in June 2023, from 24.15% and 25.55% respectively in the corresponding period of 2022. The rate on the 364-day instrument, however, increased to 28.66% in June 2023 from 27.14% in June 2022. The interbank weighted average rate increased to 26.01% in June 2023 from 19.92% in June 2022, underpinned by the increases in the monetary policy rate over the period. Average lending rates of banks also increased to 31.15% in June 2023 from 24.27% recorded in June 2022. In the banking sector, data submitted by banks for the first half of 2023 reflected the lingering effects of the DDEP, notwithstanding the strong rebound in profitability following significant losses incurred at year-end 2022 on account of impairment of holdings in Government of Ghana bonds. The industry's total assets as of June 2023 was 242.4 billion Ghana cedis, showing a moderation in growth of 21.2% from 22.8% in June 2022. Total deposits grew significantly by 42.8% to 187.6 billion Ghana cedis in June 2023, relative to 131.3 billion Ghana cedis, representing 19.1% growth in June 2022. Total borrowings, however, contracted by 39.1% to 16 billion Ghana cedis, compared with 26.4 billion Ghana cedis a year earlier. The banking industry's investments increased sharply, supported by a significant growth in deposits. Total investments rose to 89.9 billion Ghana cedis in June 2023 from 81 billion in June 2022, made up of short-term investments which grew by 149.6% to 39.9 billion Ghana cedis from 15.9 billion Ghana cedis last year, while medium to long-term investments declined to 50.1 billion Ghana cedis from 65 billion Ghana cedis as a result of portfolio rebalancing following the DDEP. The banking sector's profitability improved in the first half of 2023. Net interest income increased by 41.4% to 9.9 billion Ghana cedis, relative to the increase of 12.4% recorded a year ago. Net fees and commissions also grew by 30.6% to 2.2 billion Ghana cedis, compared with 27% over the same period last year. Operating income, as a result, rose sharply by 46.1%, higher than the 22.6% recorded in 2022. The industry's cost of operations increased, with operating expenses increasing by 44.9% during the first half of the year, compared with 22.9% growth for the same period in 2022. The net effect of these developments was a 51.2% increase in profit before tax in June 2023, compared with 20.8% growth in June 2022. The industry's profit after tax stood at 4.3 billion Ghana cedis, up from 2.8 billion Ghana cedis, and representing a 51.4% increase. The strong profitability performance during the first half of the year translated into a higher return on equity of 37.6% from 21.9% in June 2022, and a higher return on assets of 5.5% compared to 4.6% in June 2022. The key financial soundness indicators remain broadly sound, supported by the temporary regulatory reliefs extended to the banks in the wake of the DDEP. The industry's capital adequacy ratio for June 2023 stood at 14.3%. This is higher than the revised prudential minimum of 10%, but lower than the CAR of 19.4% recorded in June 2022. The decline in the capital adequacy ratio is explained by the losses on mark-to-market investments from the DDEP, as well as the increase in risk-weighted assets of banks. The industry's NPL ratio deteriorated to 18.7% in June 2023 from 14.1% in June 2022, reflecting higher loan impairments and elevated credit risk. The industry's liquidity indicators, on the other hand, improved during the period under review. Provisional data on budget execution for the period January to May 2023 indicated an overall broad cash deficit of 1.8% of GDP against the programmed budget target of 4% of GDP. The primary balance cash basis recorded a deficit of 1.2 billion Ghana cedis, 0.1% of GDP, against the target of 6.7 billion Ghana cedis, 0.8% of GDP. Total revenue and grants amounted to 44.9 billion Ghana cedis, that is 5.6% of GDP, short of the target of 54.6 billion Ghana cedis, that's 6.3% of GDP. Total expenditure was 59.5 billion Ghana cedis, 7.4% of GDP, below the target of 82.8 billion Ghana cedis, that is 9.5% of GDP. These developments resulted in an overall cash deficit of 14.6 billion Ghana cedis, of which 11.7 billion Ghana cedis was financed from domestic sources. Prices of Ghana's major export commodities, gold, cocoa, and crude oil, traded mixed on the international market in the first half of the year. Cocoa prices surged to record highs last seen over a decade ago, triggered by tight supplies from West Africa, coupled with expectations of a global deficit in the 2022-2023 crop season. On a year-to-date basis, cocoa beans gained 25.5% to settle at $3,185.29 per ton in June 2023. International benchmark crude oil prices lost 7.8% in the year to close at $74.98 per barrel due to concerns that sluggish global growth could reduce energy demand. However, decisions by OPEC Plus to deepen production cuts moderated the losses somewhat. The price of gold went up by 8.1% year to date to settle at $1,942.07 per fine ounce, as increased fears over global recession and possible slower interest rate hikes in the United States loom. Increased demand for the metal from China also helped push up prices. In the first 6 months of the year, the trade balance improved significantly to a surplus of $1.8 billion compared with $1.5 billion a year ago, mainly on account of a 13.4% decline in imports, which outweighed a 7.9% drop in export earnings. The decline in total export earnings was due to lower earnings from crude oil. Higher gold and cocoa export earnings moderated the losses. Crude oil exports dropped by 41.3% to $1.7 billion, driven by lower production volumes from the Jubilee and 10 fields and decline in world prices. Gold exports, on the other hand, increased by 14.2% to $3.5 billion. The trade surplus, together with lower outflows in the investment income from lower external debt service payments due to the debt standstill, resulted in the current account surplus of $849.2 million, compared with a $1.1 billion deficit recorded a year earlier. Similarly, the capital and financial account recorded reduced net outflow of $897.3 million on the back of lower outflows in the financial accounts. From the beginning of the year to June 2023, the Bank of Ghana has built up $1 billion in reserves, mainly coming from its gold purchase program and settlement of short-term liabilities. Gross international reserves, excluding encumbered assets and petroleum funds, improved to $2,353.95 million, equivalent to 1.1 months of import cover, compared with $1,440 million, 0.6 months of import cover, recorded at the end of December 2022. The bank's domestic gold purchase program, which was launched in June 2021 with the key objective of shoring up the bank's foreign reserves by purchasing domestically produced gold and converting same into foreign assets. Since inception of the program, a total of 7.73 tons of monetary gold valued at approximately $480 million has been added to reserves under the Gold for Reserves program, well ahead of the target of doubling the gold holdings in 5 years. The foreign exchange market has remained relatively stable for the first 6 months of 2023, supported by positive market sentiments derived from the IMF disbursement of the ECF first tranche of $600 million, forex purchases from mining and oil sectors, and weakened demand. The cedi depreciated by 20.6% against the US dollar in January 2023 and has since remained generally stable, with a cumulative depreciation of 1.8% between February and June 2023. In sum, global growth showed signs of improvement in early 2023, but near-term prospects remain uncertain amid tight financing conditions and elevated underlying inflation. Global financing conditions remain tight in both advanced and emerging market economies, reflecting pass-through effects of aggressive monetary policy tightening on bank funding costs and credit conditions. Headline inflation has continued on a downward trend across many countries, responding to tighter and coordinated monetary policy, easing energy and food prices, and reduced supply bottlenecks, although core inflation has been more persistent amid cost pressures in labor markets. Consequently, the policy stance for most major advanced economies is expected to remain tight until inflation declines to central bank target ranges, with adverse implications for financing conditions for emerging and frontier markets, including Ghana. On the domestic front, the external sector position improved significantly in the first half of the year, bolstered by a current account surplus reflecting higher gold receipts, import compression, and lower investment income payments. The external sector performance, the domestic gold purchase program, along with increased voluntary repatriation by the mining sector and liquidation of some short-term external liabilities, led to some sizable accumulation of external buffers. The outlook for reserve accumulation in the second half of the year remains broadly positive and expected to be boosted by expected inflows from the cocoa syndication and other multilateral inflows from the World Bank and the African Development Bank. Real sector indications somewhat improved, with higher GDP growth recorded in the first half of the year. The CIEA in May showed some gradual recovery, though the index remained in negative territory. Results from the confidence surveys showed some slight softening in consumer sentiments, while business sentiments remained broadly stable. Real private sector credit has come under pressure on the back of tighter lending conditions, banks' impaired balance sheets, elevated credit risk, and the observed slowdown in credit demand due to the lingering effects of the macroeconomic downturn from last year. Meanwhile, banks' half-year performance in 2023 shows considerable growth in profits following the significant losses posted in 2022. If this trend continues, we expect banks to rebuild capital buffers quickly, in addition to equity capital injections by shareholders to give a further boost to real sector growth and to build resilience of the banking sector. Early operationalization of the Ghana Financial Stability Fund should also help provide additional recapitalization support for eligible banks in line with the criteria and governance framework agreed with the IMF and the World Bank. Fiscal policy implementation for the first 5 months of the year has been broadly in line with the IMF-supported program. The primary fiscal balance is moving in line with expectations, and government's recourse to central bank financing has been eliminated thus far. Although revenue underperformed over the period, this was countered by a corresponding slowdown in expenditures. In the outlook, remaining vigilant to the risk of financing the budget from resources from short-term financing, end of the market, enhancing revenue mobilization, and aligning expenditures with revenue inflows will be key in forging ahead with fiscal consolidation efforts to help foster credibility, restore confidence, and support the disinflation process and anchor the emerging stability. Implementation of the IMF-supported extended credit facility program for the first 6 months of 2023 is broadly in line with the performance criteria targets for June 2023. While the program envisaged a drawdown in reserves of the Bank of Ghana of close to $100 million, the Bank of Ghana built reserves in excess of $1 billion. Bank of Ghana financing of the budget under the program is expected to be zero, and this has been met. Regarding the monetary policy consultation clause, inflation as of June 2023 was within the target band. After declining consistently between January to April, headline inflation increased in May and June on account of a variety of factors, including higher food prices, implementation of new tax measures, and utility tariff adjustments. Overall, inflation increased from 41.2% in April to 42.2% in May, and then further to 42.5% in June. Underlying measures of inflation have all ticked up in May 2023. While core inflation ticked up, business expectations of inflation remain flat at an elevated level. Although inflation is expected to decline in the near term, baseline forecasts show a slightly higher elevated profile in the year ahead, which, if not contained, could embed in underlying inflationary pressures. It is important that policy responds appropriately and decisively to prevent these risks from becoming embedded and consequently derail the disinflation process. In the committee's assessment, risks to the inflation profile are judged to be elevated, driven by second-round effects of food prices. Inflation has persistently hovered around 42% throughout the second quarter of 2023, even though central bank financing has been eliminated in the first 6 months of the year. Ghana's macroeconomic framework requires decisive tightening from both the fiscal and monetary side to anchor inflation expectations firmly on the declining path. Given these considerations and under the current circumstances, the committee has decided to increase the monetary policy rate by 0.5% to 30%. In the coming months, the committee will monitor closely incoming inflation data and will respond appropriately if needed should inflation persist. Thank you.
Thank you. A very big round of applause for Mr. Chairman. Big round of applause. If you just joined our live broadcast, this is the Bank of Ghana MPC press briefing. And I wish to thank some media houses that are streaming this press briefing live on their platforms, Business and Financial Times, Northern Reports, and Ghana Web. Thank you very much. Mr. Chairman, with your permission, it's question time. Mr. Chairman, there are about 8 foreign media houses who are also connected with us today from South Africa, from Spain, UK, and Senegal. Press, as always, the name of your media house is respectfully just 2 questions. So, first, Joshua, Toma, Elom. Okay, Joshua.
Good morning, Governor. My name is Joshua from the Business and Financial Times. So listening carefully to the reason for the increase, given the inflationary pressures that which we are looking at, did the committee consider the fact that the real composite index of economic activity has declined significantly, although it's still within the negative contraction arena? And also the GDP, which was reported as at the first quarter, was that part of the consideration that was given in terms of to increase it slightly by 50 basis points? My second question has to do with the some months ago when we met at the conference room, you did mention that the cocoa bills were meant for institutional investors, which is the banks, but we found out that the individual investors also bought into it. How far? You mentioned that you're going to deal with it. How far has that gone? Thank you.
Joshua, thank you. Toma.
Good morning, Governor. My name is Toma Emiri. I represent Corporate Guardian magazine. Sorry. Please, my first question is, the last time we were here, you were talking about the need to sterilize the potential inflationary effects of the first tranche of the IMF money that was coming in, since it's budgetary support, not balance of payment support. I want to know what the Bank of Ghana has done or is doing to prevent those inflows from generating further inflation in the economy. The second one is we just want to know what, according to the Bank of Ghana's stress test, will be the likely impact of the restructuring of cocoa board bills on the banking industry. And in addition, what is the expected effect of the ongoing restructuring of the external debt, since banks in Ghana hold substantial amounts of Eurobonds? Just one question is, has any bank still yet applied for emergency liquidity assistance?
Thomas, thank you. Elon.
Thank you very much. My name is Elom. I write for Economic Times newspaper. My first question, Mr. Governor, now that we've increased the policy rate by 50 basis points, how can we improve on our tax revenue, our tax GDP revenue, if we keep hiking the policy rate? My second question is, you've said much about the good for oil policy. If the good for oil policy is such an innovation, why is the World Bank, why is the IMF asking us to stop the good for oil program? Thank you.
Edwin Nyako.
Good morning, Mr. Governor. I work for Ghana Broadcasting Corporation. The Fed in the U.S. is considering 25 basis points hike of interest rates. Are likely to also go up due to the ramping up of demand in China and India.
Okay, thank you. So I'm ready for a response. Thank you.
Thank you very much for those questions. Starting with Joshua from BNFT, whether the real composite index and the GDP were considerations in the decision to increase the policy rate by 0.5. I don't know what the import of the question is, whether the increase was mild, and that's why you probably are saying that are we watching the real sector, if that's the import of the question.
Yes, so given that GDP increase, it actually shocked the...
But let me say that, if you look at the balance of risks for us, looking at growth and inflation, right, we think that the balance of risks is on the inflation side, with inflation at 42%. The effort right now for the Monetary Policy Committee is to bring inflation down relative to what we see happening to growth. In our assessment, the GDP out 10 for the first quarter published by the GSS was much better than we had a year ago. So the committee was concerned more about the rate of inflation than on the real sector side, if that responds to your question. On the cocoa bills, yes, as I had said, these were originally the short-term instruments, 182 days, designed to be held by institutions to finance cocoa. That's how they were designed. And over the years, because they were attractive, I think individuals also, were investing in those bills. So far, almost all the individuals who were holding these instruments whose investments matured have been paid. They were given priority in terms of the settlement. And as you are aware, the restructuring of the cocoa bills have started now. So the banks are submitting the cocoa bills, the old cocoa bills for the new restructured cocoa instruments. Toma on need to sterilize potential impact of the IMF flows. Well, yes. To the extent that if it were a balance of payments support, you would not have had an expenditure component on the fiscal side. But since it came in as a budget support, there's an expenditure component on the fiscal side. So for us, it just adds to the many sources of liquidity in the economy, and the central bank has focused on withdrawing liquidity generally through our open market operations. And I think that if you look at the data, you've seen that the Bank of Ghana has been very active in withdrawing liquidity from the economy in the first half of the year. Now, you asked a very interesting question on the impact of the cocoa bills and the euro bonds on the banks. This assessment has already been done. A lot of the banks have already taken, the impairments on the cocoa bills and especially the euro bonds on the basis of certain assumptions that they have made on what the settlement would look like. So the impact on the financials of the banks have already been, in a sense, taken care of by most of the banks. And the holdings are quite concentrated, and there are not that many banks that are exposed to these euro bonds. You see that there are certain banks that, went into investing in these euro bonds very strongly. And then you had a specific question on whether any bank has applied for emergency liquidity support. So far, we haven't had any bank apply for emergency liquidity support. Along your question on how can this increase in policy rate improve tax revenue, I don't think they are directly related. Tax revenue is on the fiscal side, and we are operating on the monetary policy side. And to the extent that we are able to bring inflation down, and if indirectly through lower inflation you are able to see higher economic activity, then of course then the tax revenues would improve. So it's rather indirect rather than a direct relationship between the two. But you ask a very interesting question. Why is the IMF asking you not to do the gold for oil if it was such a good innovation? This is what you said. But I think that's an interesting question. The gold for oil program, in my view, was key during the crisis when our foreign exchange market was in complete disarray, and the forward foreign exchange rates were being quoted, in very extreme terms. And this was affecting the pricing of petroleum in the country through the BDCs. And so that intervention really was a part of the crisis mitigation measures to deal with what happened in 2022. So as things normalize, we think that the gold for oil would also gradually sort of stabilize. The IMF did not say we should completely exit that policy. The only issue that came up was our exposure, to ensure that we don't increase our exposure further to the gold for oil policy. So that's where we are on that. GBC, the question on the Fed is considering a hike similar to the hike that we have just announced. That should mean that the interest differential between Ghana, hopefully, and the U.S. should remain unchanged. And if there is any incentive for a capital outflow, the fact that we have tightened policy here, we should help to mitigate that capital outflow from Ghana. But it tells you the times that we are in. Globally, everybody is putting priority on bringing inflation down to low levels, and all the major central banks of the world, whether it's the US Fed, whether it's the European Central Bank, whether it's the Bank of England, they are all focusing on bringing inflation down. This is where everybody is focused on. Everywhere in the world, inflation has risen because of food prices. We know what has happened to food prices as well as oil prices. And everybody's trying to address the second round effects of these supply side shocks. So it's not unique to Ghana that we are seeing, monetary policy being tightened, even in cases where we are having some supply shocks also driving the rate of inflation. Because you have to ensure that those shocks do not lead to persistence in the change in the price level. I think that does it.
Thank you. Second round, George Rafi. Nanaoye, Bruce, Maxwell. I'll come to you. We'll come back. George.
My name is George Rafi from Joy FM. My first question has to do with, in respect of the recent spike in the debt, public debt. What was the reason for that, if you can help me? Is it still the exchange rate effect that contributed to the spike? And again, it comes back to my question about what is the bank doing to strongly stabilize the city because of the impact on the debt dynamics. I looked at your numbers, and when you look at monies outside the banking system, there's been a spike. I stand to be educated on the nominal numbers. What is the BOG doing to ensure that you rein in this money outside the banking system, be it local currency, be it foreign currency? And also, how are you also working with the various institutions, being the FIA, financial, forgotten the name, to check with all these things? Because then, with all the work that you're doing, stabilizing the Ghana city, if these excess positions are all outside the banking system, doesn't it make your work a little bit useless, some would say? And so I just wanted some clarity on that one.
George, thank you. Nanoye, 2 questions per media house.
Right, thank you. Good morning. My name is Nanoye from Asasi Radio. Mr. Governor, I am sure that by now your team would have heard about a public official who has or who kept a significant amount of dollars in her home. Allegedly, yes, because it's still in court. But the charge sheet, actually, based on the testimony that she gave, said that she had that amount in her home. Does it come to you as a worry, $1 million plus 300,000 euros? Does it come to you as a worry because you are looking at confidence in the banking system and also having that amount of dollars in her home? That's my first question. My second question has to do with the arrest of some cyber fraud agents who have been extorting money from people. I know that quite a number, about 400 people were arrested. What has happened to them? I know they were arraigned before court, but I want to know if the system has been sped up for us to see some kind of jail term or punishment for them. Thank you.
Okay, no, thank you. Bruce.
Okay, my name is Mano Bruce from Graphic. The IMF program document noted that the central bank was committed to completing some tasks from the financial sector cleanup, and specific mention was made to the insolvency issue of NIB. I wanted to find out the updates on NIB.
Hello, this is Maxwell Adombila Reuters. Governor, interest rates have been going up again. Do you see the end, or there's more ahead? And then the rates going up, will it go up again if inflation continues? What is the bank's thinking about that? And then, okay, finally, on the issue of Financial Stability Fund, you did mention that no bank has applied, but is the fund ready? Are the regulations ready? Thank you.
Thank you. Last question for this one, Kisley. Very brief.
Okay. Going through the BOG's website, you realize that the banking sector report is not there. When are you going to see the problem resolved? When are you going to put the report there? Then secondly, has any bank submitted...
which type of report? Which report is this?
The Bank of Ghana annual report.
The monetary
No, so is it a BOG annual report? Is it a monetary policy report? Which one? Which one are you talking
The
about?
one that comes hand in hand with the monetary policy report.
Kisley, which report are you referring to, respectfully?
The banking sector report.
Banking sector report. Okay, thank you. Proceed.
Okay, and secondly, I want to find out which of the banks has submitted its recapitalization plan, and what incentives are there for those which submit, especially for the public banks.
Okay, Kisley, thank you. Michelle, we're ready for response. Thank you.
Well, another set of very interesting questions. George Yafi, the recent spike in public debt, I think you answered that question yourself. You only have to look at the data, the statistical data that the bank published on Friday, and you'll see that the external debt component in CD terms, tended to increase significantly. Domestic debt only increased by about 11 billion CDs or so. So most of that, what you call a spike in public debt, was due to the exchange rate movement, especially in January. As I read the press release, we noticed that there was a significant exchange rate adjustment in January. That is what impacted on the dollar value, the CD value of the external debt. So, yes, we agree with you that this is the problem that we had, the issue of debt sustainability that we had in 2022, and therefore the exchange rate impact, the sensitivity of the debt to the exchange rate was very high, right? So that's one of the things that the debt restructuring will try to correct, so that hopefully by the time the discussions are concluded on the external debt side, both from the bilateral partners and the bondholders, our external debt would be reduced, and therefore that sensitivity to our exchange rate will, in a sense, reduce. So yes, it's an important point that you have raised, and hopefully we'll see to the end of that sensitivity when the external negotiations are completed. And then you also referred to the spike in monetary numbers. I'm not sure whether it's a currency outside banks, which, as I said, we have improved the use of liquidity management instruments. So you will see that the Bank of Ghana open market operations have also been increased. There is a seasonal part of that also. When we purchase cocoa with CDs. That goes to augment the amount of CDs out there. When we purchase gold, and we are purchasing quite a bit of gold. When we purchase gold, we add to the amount of CDs out there. The good thing is that we have a foreign exchange backing for all the CDs that we use in purchasing the gold, and therefore it puts the bank in a very strong position to sort of sterilize the impact of CDs that are put out there because of gold. So you're right, and this is an area where the bank is taking a very close look at, and the liquidity operations of Dr. Zachary, your liquidity operations, which we have been talking about, obviously is going to be a major priority for the rest of the year. Nanoye, the first question that you asked, yes, we are all worried, but really, I mean, this is a matter that is still unfolding and involving the court, so there's not much that one can say. On your question of the collaboration between the bank and YOCO and the Cyber Security Authority, yes, I mean, based upon the intelligence that we had, a lot of people were arrested. So over 400 people, in rooms, doing online lending without license. These guys are not licensed to be engaging in those kinds of activities. So they were arrested, they have been processed to court. And I think that we will continue to remain vigilant to ensure that these kinds of illegal operations do not persist. Bruce, is that Bruce? Your question was on NIB, whether they raised that in the IMF document about the insolvency of NIB. That obviously is going to be part of the financial sector policy under the IMF program. And once we are done with the immediate issues of the impact of debt, we have to also go back to relook at banks and make an assessment of those that are viable and those that are not viable. And the NIB is one of the banks that have been figured to make that assessment, whether we want to make it viable or not. If it's viable and the government can find the money to recapitalize it, yes. If it's not viable, then obviously we'll have to find a different use for that instrument. So these are ongoing discussions between us and the international partners. And I believe that in the next year or so, we'll get a clearer sense of how to handle those particular institutions that are very weak. Maxwell, the question you asked, whether interest rates, whether we'll see an end to interest rate tightening. I just spoke about what is happening globally. This is really what is happening globally. Everybody is focused on bringing inflation down, right? So I would have answered that yes, you will continue to see policy tightening until we get inflation where we want it to be. But we also cannot look at it in isolation because monetary policy alone cannot deliver that low inflation. So we expect that, the fiscal side of the work would also have to come in with, the appropriate fiscal consolidation and tightening would also help us, in a sense, not to have this persistent increases in the policy rate. But clearly, globally, everybody is focused on bringing inflation down. Financial Stability Fund, the regulations are ready. I believe the minister, after the mid-year review, would make some, provide some clarity on the Financial Stability Fund. So let's wait to hear that later on this week. Bank of Ghana website. There's a lot of confusion about this question, banking report, and I think it's about Bank of Ghana's financial accounts for 2022. That's where the discussion is, and the fact that we have not published our accounts for 2022. And we have already explained to the public that the accounts have not been published because the external auditors have not completed their work because of the domestic debt exchange. In addition to the fact that the bank holds bonds, as you are aware, the bank also had an overdraft, which is also another debt to the government, and some other, lending that have taken place between us and Cocoa Board as well. So all of these have to be, all of the work on the impairments on all these instruments have to be completed before our annual report, can be published. Fortunately, a lot of progress has been made. So we expect that by the end of this month, hopefully, we should be able to publish our annual accounts.
Mr. Chairman, thank you.
I think was on whether any banks have submitted recapitalization plans. I think that was the question you had. And all the banks with gaps have submitted their recapitalization plans. This is all of them.
Okay, thank you. Thank you, Chairman. So, Moses, McByron, Ellie, and Rosemont. Which one? No, yes, we can provide more information, additional information after. Yes, sir. Right. Thank you. Yes, Moses.
All right. Thank you, Governor. Governor, in the summary, you admitted that the uptick in inflation was due to higher food prices. You said taxes. You spoke about utilities, and you concede that you have a stable currency, and that you also added that you also believe that inflation was on a downward trajectory. Against this, you still managed to hike the rate. Why did you decide to surprise the market? My second issue has to do with in the GIR, Gross International Reserves. We noticed that there was a reflected 600 million that accounted for the inflow from the IMF. But the subsequent month, almost all of it was also gone again. What accounted for that? In the subsequent month, it was most of it was not there in your GIR. That's from May through June, and as compared to July, that almost the entire volume, a good measure of it wasn't there. What could have accounted for that? And maybe finally, you spoke about the DDE. Does it mean that all your debts are going to be all your overdrafts are going to be added to our domestic debt that is currently debt exchange that is currently going on? Thank you.
Thank you, Mark Byron.
Okay, my name is Mark Byron with UTV. All right. Governor, I want to find out whether, in regards to the deployment of armored vehicles for the banks, whether they are complying with it. Because you can still see some banks, some cars, armored cars in town without even military escort going about their duties, and as to whether they are complying or not. Thank you.
Thank you, McByron. Ellie.
Governor, good afternoon. My name is Maoli Aholomega. I work with Ghana Web. So my question has to do with the suspension of forex licenses for Fidelity Bank and also First National Bank. I wanted to find out if they've been able to pay the fine and whether their licenses will be restored possibly on Friday. And then the second question has to do with the DDEP, whether there's been a formal meeting between Ghana and then our bilateral creditors.
Hey, thank you. Rosemont.
Mine has to do with Maxon as in relation, because we had a directive that effective July 1, that was when the million vans were going to be operating. Now we are on July 24th, so we want an update from him. Thank you.
Okay, Rosemont, thank you, Chairman.
Okay, so starting with Moses, and your question was the uptick in the policy rate and the fact that I had identified utility tariff adjustments and food prices and all that. I thought I had addressed this issue ahead of these types of questions when I said that globally all central banks are tightening, and the source of the problem is also coming from energy and food prices. So all central banks are tightening, and all central banks are facing supply side shocks from food and energy prices, and they are focused on the secondary effects or the second round effects of these types of shocks, right? So yes, despite all that I said about tariff adjustments and those sort of things, we are looking at the second round effects and how all of this is feeding into inflation expectations, right? So that's really the basis for the decision to, raise the policy rate, just to re-anchor inflation expectations. So it's very deliberate. It's not a surprise. It's consistent with what is happening all over the world, right? And then you're saying that the second question was on the gross international reserves. If you look at the statistical bulletin that we put out, there are two versions of the gross international reserves. One looking at the simple total of gross reserves, and one excluding encumbered assets and petroleum funds, right? So if you see, you have to be sure of which of those lines are, showing the kinds of numbers that you alluded to. It may be because we had, settled liabilities that were on the bank's books, including some of the swap arrangements that the Bank of Ghana has. And then your third question was on the overdraft. Yes, the overdraft is part of the government debt, and therefore it's part of the debt perimeter and subject to restructuring. And the terms of the restructuring are already known.
Thank you.
So those are your three questions. Then the next one I have here, armored vehicles, whether the banks are complying with it. I think broadly most of them are complying. You heard about the unfortunate event that took place a few weeks ago, and we immediately, asked them to comply and not wait for July 1st to comply. The lady who talked about the July 1st deadline, we immediately asked the banks to comply earlier. It was 2 weeks or so to the end of June when that incident occurred, and we immediately issued directives to the banks to comply immediately. So most of them are complying, I should say. Overall, most of them are complying. There are standard operating procedures on how money is moved, and between the banks and the police and ourselves, we have issued guidelines on how they should go about these things. Ideally, there should always be a police escort, and the police is not even supposed to sit in the armored vehicle. They just have to respect the standard operating procedures that have been laid out for them. They're supposed to be wearing the armored clothes that have been supplied to them. All of those issues are there. And so we are expecting that going forward we shouldn't be seeing any of these incidences.
So maybe, Governor, respectfully, in relation to that, how many of the banks have procured the armored vehicles per the directive you gave?
A lot of armored vehicles have been procured by the banks. I cannot tell you the exact numbers, but a lot. The Ministry of Interior has to give approval for them to import. I've seen a lot of clearances from the Ministry of Interior, but we can get you the exact numbers from our currency department. Is it Mauli who was asking about the forex measures? Forex measures for Fidelity and which one was the other one? The FNB. Yes, so they already had their license restored 2 weeks ago. We actually reduced the punishment by half, so they didn't do a full month of absence from the market. They only were suspended for 2 weeks, so they've been back in the market for some time now. And then somebody asked about whether we have engaged bilateral creditors. I'm not sure if there have been a formal engagement, because the bilateral creditors have to, consult among themselves and take a position and then officially communicate that with us. There are informal, contacts between the parties and the government, but I'm not yet sure if the formal meeting has been called yet. The last question was on the armored vans and the deadline, which we have seen to already.